Hello, everybody. Gbenga Olatunji here, welcoming you to GJAMES Associate channel, where we'll be looking at strategic financial management today, what it's all about, and the difference between financial management and strategic financial management. Strategic financial management, as much as it relates directly to strategic financial management, is like the basis of which strategic financial management is standing on. Meanwhile, strategic financial management is more encompassing, is more futuristic, it has longer lifespan and longer scope. Also, we'll be looking at the nature of strategic financial management. As we move on, we welcome those that are just joining us for the first time, while we appreciate return viewers. Strategic financial management, it entails setting out objectives of the organization, corporate objectives, financial objectives, and the like. And also it ensures that we identify our resources. Where would the resources come from? Where would the funding come from, and the like? We need to know all this, and that is where SFM comes in. Analyzing data is part of strategic financial management. Making financial decisions is key, and we are going to look at the three major decisions that strategic financial managers must make as part of their role, apart from some other things that they must do. We are going to look at that too. Strategic financial management also is about monitoring performance of the identified problems, challenges in our businesses. That is another thing that strategic financial management entails. When we are talking about strategic financial management, we are referring to financial management on a bigger scale, on a longer term and longer time framework. It concerns itself usually with bigger decisions than financial management. And those decisions also might have a profound effect on the organization. And there is no how we are going to talk about all strategic financial management is all about without talking about what strategy is. And when we are talking about strategy, we must talk about the contribution of Drucker. We must talk about the contribution of JSW. I do call them JSW. That is Johnson, Schools, and Whittington. We must talk about the contribution and definition from Chandler. So these three people, or three groups of people, they're actually like six: Chandler, Drucker, GSW, that is Johnson, Schools, and Whittington. They are three, but they used to write books together and do majority of their things together. I call them GSW, their definition of strategy. So when we are talking about what SFM is all about, we must look at them and their contribution equally. Strategy or strategic financial management has one profound nature, and it refers to the aspect of management which involves planning and control. Planning and control. And to ensure that the organization achieve its objective. Don't forget, part of strategic financial management endeavor is to set out strategic objective. So also it is in the nature of SFM to ensure that those objectives are actually achieved, and that is why monitoring comes in, which we last spoken about. So this decision will involve how much finance the business will need for its day-to-day running of the operations, and also longer term the investment projects that we have at hand. It is in the nature of SFM to look for where the finance will come from and how we are going to obtain it, and the types of investment we want. Is it debt in fund or is it equity fund and finance we want to obtain? Where are they going to come from? Is it on the longer term or on the shorter term? How are we going to manage short-term cash surpluses and short-term cash deficits? These are profound elements and nature of strategic financial management. As strategic financial manager, we must think about dividend payment, the regulations that surrounds it, dividend payment in our country. We must think about it. We must think also about how to protect our organization against financial risk. Strategic financial management thinks about how to protect the organization from financial risk, and we agree that when we are talking about financial risk, it is broad in its nature. We've treated risk too in business. Financial risk is broad. Derivative risk, fluctuation, rate risk, exposures, options. It's a broader topic, but it is in the nature of SFM managers to ensure and job role all these are ensured, are well managed. What is strategy according to Chandler, and what does the definitions from these three groups of people have in common as to the definition of strategy? According to Chandler, the determination of the basic long-term goals and the objective of an enterprise, and the adoption of courses of action and the allocation of resources necessary for carrying out this goal. That is strategy. So, some of the things we can point out from the definition of Chandler as to strategy: long-term, goal, objective, adoption of courses of action, allocation of resources, ensuring the goal is achieved. What does Drucker has to say? By definition, according to Drucker, strategy is a pattern of activity that seek to achieve the objective of the organization and adapt its scope, resources, and operations to environmental changes in the long term. So resources is coming out again, long term is coming out again, scope is being introduced, the organization too is mentioned, and the business environment. The JSW, that is Johnson School and Whittington, what do they have to say about strategy definition? Then we look at their works together holistically, form the basis of what strategy is. JSW said the direction and scope of an organization over the long term, which achieves the advantage in changing environment through its configuration or resources and competencies, with the aim of fulfilling stakeholders' expectation. So they brought in also long-term resources, stakeholders' expectation, competence or core competencies of the organization and the like. While one mentioned some critical thing and the other left it unmentioned, they all have similarity in common, and we can summarize their definitions in this way. A strategy consists of organized activity. Please don't forget to mention that in the exams, in your definition. A strategy consists of organized activity. So that means that doing business haphazardly will not amount to results or any tangible strategy that could win in the changing environment, especially in this 21st century we find ourselves. Also, the purpose of this activity, that is the organized activity, the purpose of strategy, you can use the word, is to achieve an objective. Be it stakeholders' expectation as objective, be it corporate objective, be it business objective. Every strategy must drive towards achieving a particular result. Therefore, as strategic financial managers and as persons studying strategic financial management, we must ensure that our organization achieve results, and every strategy, we must organize our activity in such a way that results will be achieved. The definition of strategy is quite broad, and under corporate strategic management and ethics, CSME, it has been treated. And for those of us that have not joined us that time, or people that want to be sound in the introduction of strategic financial management, I encourage you to look for the videos, and we are going to drop their links too as much as possible under these videos description and details below, so you can look out for it. From GJAMES Associate Channel, Gbenga Olatunji FCA has been speaking. If you are yet to subscribe, please go and subscribe, because we are going to move on to next topic. The next topic that we will be going to now, let me show us as we introduce ourselves to it. We will be looking at the 3 decisions a finance manager must make, still on strategic financial management. So please, if you have comments and anything you want us to know, you can email us as displayed now. Don't forget to like if you've enjoyed this, and also pass it to others by subscribing and sharing the video so that people around you can easily be beneficiary of this good work. And in subscribing, you are encouraging us to do more. Gbenga Olatunji FCA, we have value to life from GJAMES Associates. We pride ourselves that we are value to your businesses. So next will be the three decisions a finance managers must make.